Students, now the chapter that we are going to discuss is very important as far as the investment schemes for individuals are concerned, because many people would like to make an investment into multiple schemes so that their wealth will keep on growing, and in the end, when the scheme gets matured, they'll be getting a lot of benefit from it. So pensions are basically those schemes in which individuals have an option to invest in, and that's how it's going to generate income in their old age. So pension is basically associated with giving the benefit to individuals in their old age, usually at the point of their retirement. So whensoever a person gets retired or reaches to an old age, he will receive pension income. The pension income which is going to be received at the point of retirement or at an old age shall normally be considered as taxable income, and this is going to be taxed under non-savings income. So where an individual will eventually be receiving pension income, he will be liable to pay tax on the pension income that is received during the tax year. And he has started getting the pension income. The pension income, whatever the amount is received in the tax year, shall be put under non-savings column, on which he will have to compute his tax liability. So pension, when received, is taxable. And is taxable under non-saving income column. I mean, the rates related to non-savings column are to be applied, where if the income is gonna get accommodated in basic rate band, the rate of tax will be 20%. If the income is gonna be exceeding the threshold of basic rate band, then the higher rate will be applied at the rate of 40%, and afterwards additional rate of 45% shall be applied. But the income which is received at the point of retirement in the form of annuity, which is going to be received perpetually every year, the amount that is received every year shall be taxable upon an individual. But for the whole term, for the whole time period in which an individual keeps on contributing into pension schemes, shall bring him tax advantages. So if I, being an individual, if I keep on contributing into pension schemes, every year in which I tend to contribute, I shall receive certain sort of benefits from tax perspectives. Though there are multiple types of pension schemes, but the most important are here in our syllabus. There are basically two most important types of pension schemes, namely Occupational Pension Scheme and the Personal Pension Scheme. If I talk about Occupational Pension Scheme, this is the pension scheme which is gonna be arranged by employers for their employees. So if a person is working in some sole proprietorship setup, or he's working for partnership business, or if he's working in some company, then the employers of either the sole proprietorship business or a partnership business or the company will be considered as employers for the employee. And Occupational Pension Scheme is basically the scheme which is provided by employer, not for their own selves, rather it is provided by employers to their employees. So for instance, if there is a person who is working as an employee in some organization, and his employer is gonna be providing him with the facility of pension scheme, it is said to be an occupational pension scheme, where employee can contribute. It can also be a chance that employer will also be contributing in his pension scheme, and there are chances that both employee and employers will be contributing in the pension scheme which is gonna be provided by employer to his employee. But whatsoever is being contributed by either employer or employee into the occupational pension fund, that will eventually be received by an employee at the point of retirement, after the retirement. So the thing is that employer or employee, and even both, if they are contributing into pension schemes, that amount which is deposited into pension scheme will be invested further, and a lot of return is going to be generated over it, and it is being accumulated into the fund, and that's how the fund keeps on growing. But whatsoever is being accumulated into the fund, when the employee reaches to old age, whenever the employee gets retired, he will start receiving the income out of it. So the mechanism that now I have to discuss with you people is for that time period when employee as well as their employers are contributing into the pension schemes. By the way, one should not forget that there is another important type of pension scheme as well, and that's called personal pension scheme, which is basically available to employees. Though employees are given with an advantage of occupational pension schemes, if an employee wants to, he may also join a personal pension scheme. So technically we can say that an employee may either join only occupational pension scheme, or he'll be joining a personal pension scheme, and even he has a flexibility of joining both of the schemes. Similarly, the self-employed persons, who are running their own businesses, self-employed persons may join personal pension schemes. They can keep on contributing income into the pension schemes which are of private in nature, which are of personal in nature. As far as occupational pension scheme is concerned, the self-employed person cannot arrange it for his own self. The self-employed person acting in a capacity of an employer for their employees may arrange occupational pension scheme for their employees, but not for their own selves. But when it comes to self-employed persons, they may have an option to arrange personal pension scheme, or you can also call it as a private pension schemes for their own sake. So every person has an option to join personal pension scheme, while occupational pension scheme is the pension scheme which is provided by employer to employees only. So now I'm going to discuss that what happens when the contribution into pension scheme is made, and what are going to be the tax advantages, and I'll be discussing these two pension schemes one by one. First of all, I'll be discussing the occupational pension scheme, and later I will discuss the personal pension scheme. So as what I have discussed with you people, that occupational pension scheme is the pension scheme which is always arranged by employer for their employees, in which either employee will be contributing every year or their employers will be contributing every year, and there could also be a chance that both of them will be contributing into the same scheme for the sake of their employee. So whatsoever the amount employee contributes shall be considered as an allowable deduction. The expense that is being made by employee in order to contribute into occupational pension scheme shall be considered as a deduction against his employment income. And when employment income is going to be reduced, the tax liability of an employee will be reduced as well. So for instance, if in the tax year employee contributes, let's say, £1,000 into his occupational pension scheme, and I just hope that you all people know that how the employment income for an employee is calculated. We need to take into account the salary figure, the bonuses, commissions, benefits, and allowable deduction. Normally these things are taken into account, though apart from these things there are many other things as well which could be taken as a part of our employment income, but generally these 5 items are considered in order to compute employment income. So when I say that employee has contributed £1,000 For instance, in his occupational pension scheme, this £1,000 is going to be deducted from his employment income. And when something is going to be deducted from employment income, what's going to happen? Yes, the employment income will get reduced down. When the employment income is going to be reduced, that shall be having an impact of reduction of income taxes for that employee as well. And what if an employer will be contributing anything on the behalf of employee? Keep one thing in mind, that whatsoever the employer contribute into the pension scheme of an employee, that is said to be an exempt benefit. By taxable benefit, I mean to say the benefit on which tax liability should be paid. But by exempt benefit, it means it's a tax-free benefit. So for instance, if my employer is putting £500 into my occupational pension fund every year, so every year I will be realizing that eventually at the point of my retirement, at some old age, I'll be receiving all the money along with its return. But here at the current moment, nothing is gonna be taken into account. I mean, the contribution which is being made by employer shall be considered as zero. This is to be taken as an exempt benefit. So by not taking into account something which has been contributed by employer into your occupational pension fund would lead to what? It is not going to increase your employment income. Employment income, if it is not going to be increased, this would tend to do what? This would tend to save your taxes. So for instance, if I say that my employer has contributed £500 on my behalf in my occupational pension fund, this will be treated as an exempt benefit. I mean, on this figure, no tax liability shall have to be paid. And if on the other hand, I would say that I being an employee, I am contributing £1,000 into my occupational pension fund, that is said to be my allowable deduction. And by allowable deduction, I mean to say that this amount is going to be deducted against my employment income. My employment income will be reduced and hence the taxes are reduced as well. So see how much figure has been contributed into the pension fund. 1,000 has been given by me, the employee, and 500 has been put in by the employer. So total £1,500 has been contributed into occupational pension fund, but this £1,500 has brought tax advantage to me. £500 has not been taken into account for taxation purposes, so the tax has been saved, and £1,000 being contributed by me, the employee, has lowered down the value of my employment income and hence reduced the taxes. So this is how on £1,500 I had been able to save taxes. How had I been able to save my taxes on £1,500? I did not have to take into account 500 in my calculation, and thus the tax got saved, and £1,000 got deducted from employment income, and that has also resulted into the saving of taxes. So altogether on £1,500 the tax liability has been reduced, has been saved. So I shall say that I have got a tax relief on £1,500. The employee shall be getting a tax relief of equivalent to £1,500 as far as this scenario is concerned. Consider the contribution that is being made by employer from a different angle. If the employer is contributing something into the occupational pension fund of an employee, that is basically the expense of my employer. And what is the source of income for my employer? Of course, the employers earn trading profit. They have to compute tax adjusted trading profit because this is their source of income on which tax liability shall have to be calculated, and whatsoever is being paid by employer on the behalf of employee shall be considered as his allowable deduction. So the employer is going to get the tax treatment as well. The employer will be deducting any contribution, any expense that has been made by him for the sake of his employee, that is to be treated as his allowable deduction. He will be able to make a deduction against his trading profit. The trading profit gets dropped down, and even employer is going to get an advantage in terms of saving of taxes by any contribution that he has made into the pension scheme of their employees. So as what I've told you, that in the occupational pension fund, either employee or employer or even both of them will be contributing into the fund, and in the end, at the point of retirement, the benefits are going to be received by employee along with the return. And employee is going to take dual tax advantages. I mean, whatsoever he is going to contribute will be considered as allowable deduction, which will be taking down the employment income to a lower side and thus reducing the taxes, and that's how the tax relief is going to be obtained. On the other hand, the amount which is being contributed by employer into the pension scheme of employee shall be considered as exempt benefit, and by exempt benefit, that would mean that this is not going to be taxable at all. So this is like going to bring another tax relief as well. And someone might be thinking that, is there any sort of limit on the level of contribution that could be made by employee into the scheme? Then the answer is no. There's absolutely no limit on the level of contribution that could be put in by employee into his pension scheme, or even by employer. Whatever the amount either employee or employer decides to contribute into the pension fund, they can. But keep one thing in mind, that their tax reliefs are somehow restricted. I mean, there is no restriction on the amount that could be contributed by employee, but when it comes to the tax treatment could be restricted. I mean, tax advantages are going to get restricted. So let's see all the tax implications as far as occupational pension scheme in detail with the help of an example. So for example, there is a person who started doing his employment in the tax year 2021 and his earning is of £25,000. By an employee's earning, I would mean to say whatsoever he's like going to get in the form of cash from his employment, as in salary, bonus, commission and all. So for instance, being an employee, he himself would decide that he's going to contribute £12,000 into his occupational pension scheme, while his employer has decided to contribute £2,000 on his behalf. Keep one thing in mind, that it is not always essential, but employer may decide to contribute on the behalf of their individuals in their occupational pension schemes and even in their personal pension schemes. By the way, personal pension scheme is another important type of pension scheme which will be discussed later. So see, I will have to discuss that what has to be the treatment of the contribution which is being made by either the employee or their employers on their behalf. And I hope you also know it very well, that whensoever an employee is going to contribute anything else into their occupational pension scheme, that shall be considered as an allowable deduction, right? So it is going to be treated as an allowable deduction, while the amount that is being paid by employer on the behalf of their employees, that shall always be treated as exempt benefit. So see, these two things are going to give us a tax relief. These two things are going to give us a sense to reduce our tax liability. How come? The amount that is being contributed by employee is going to act like an allowable deduction. And what is an allowable deduction? Yes, it is going to reduce our employment income. As in employment income, we tend to take salary, bonus, commission, benefits, and allowable deduction. So if this person's earning is of £25,000 and in the name of allowable deduction, he would be deducting £12,000. So this is going to reduce his level of earnings and hence the taxes. And by the way, whatsoever the amount is being contributed by his employer, that shall be regarded as exempt benefit. I mean, nothing will have to be taken into account as far as employment income calculation is concerned. So, see, the benefit is not going to be counted, which is why no tax liability will be paid. And to £12,000 being the amount contributed by employee shall be reducing his earning, and that's how these two figures will be in their own different ways are trying to reduce the taxes, and that's how we can say that we are going to have a tax relief. So on how much figure we are getting a relief? This is on £14,000. £12,000 being the amount contributed by employee, this has led to reduction on our in our income, and that's how we'll be able to reduce our taxes. And £2,000 being considered as exempt benefit, that would not be leading to any kind of taxes. So £14,000 is not the amount of tax, it is the amount on which tax liability will have been saved. So this is called the tax relief. And keep one thing in mind, that government has set a certain standard, a certain value for a year, which is called annual allowance. And annual allowance for this year is of £40,000. And what is meant by £40,000 being an annual allowance? I mean, actually, this is the threshold by which the government is allowing an individual to save their taxes, to have a tax relief in any tax year if they are making contributions into pension schemes. So we'll have to see that nobody will be like crossing this threshold of £40,000 being the annual allowance figure. So in this case, you could see that £14,000 has been saved, which is like way lesser than the annual allowance figure of £40,000. So we haven't crossed the limit. We haven't saved unnecessary taxes. Rather, we can say that we haven't been able to utilize our annual allowance properly. We are just left with some of the annual allowance, and how much of the annual allowance is still unused? That's of £26,000. But as long as we are not crossing the limits, I mean, we are not trying to save our taxes over and above £40,000, that is not going to create an issue for government. Now, let's move to another year. So in the next year, let's say in the tax year 21-22, the employee's earning got increased to £32,000. I mean, his salary, bonus, commissions, the collective value of his earnings from his employment income got increased to £32,000. And this year, this employee has decided to contribute the same amount into his occupational pension scheme. By the way, the question is that how come an employee will be contributing each and everything into his pension scheme? I mean, if someone is like earning 32,000 and he's like going to contribute the whole amount into his occupational pension scheme, I mean, he's like going to save everything for the future, then how would he meet his both ends in the current tax year? How would he survive in the tax year when he has invested everything? See, students, I did not say that this is the only income of this person. There could be a chance that this person, this employee, has a lot of cash available in his bank account, or he has let out his property to someone else and he's getting rental income, or he has some deposits in the bank and he's getting interest on it, or he has made investment into shares and he's getting return in the name of dividend. So he must have other incomes as well, which are essential, which are sufficient for his survival. But as far as this income from his employment is concerned, that is something which he's like trying to invest completely into his occupational pension scheme. Now the next question is, would government stop him, restrict him from doing the complete investment? And the answer is no. So if an employee would decide to contribute exactly the same amount which he has earned from his employment income in a tax year, the whole amount will be treated as allowable deduction, right? So AD, it's like allowable deduction. And for instance, his employer has said that he would be contributing 3,000 on his behalf. Whensoever an employer would decide to contribute anything on the behalf of their employee, that shall always be treated as exempt benefit, right? So £32,000 is going to be considered as an allowable deduction. It is going to reduce our income, and £3,000 is not going to be taxable. It's an exempt benefit. So altogether, on how much figure we have saved the taxes? Yes, 32 plus 3, it's like £35,000 is the figure on which individual employee has got a tax relief. He has been able to save his taxes. This is the figure of his tax relief. Now, the point is that has he crossed the threshold? Has he crossed the limit? And the answer is no, because the limit, the annual allowance figure is of £40,000, and this person has saved tax only on £35,000 in this tax year. He has not crossed the threshold of annual allowance of £40,000. Rather, I could say that he had not been able to utilize the whole of his annual allowance. His annual allowance got unused by £5,000, right? So let's say, I'm just continuing with the same example. Let's say the next year is 22-23, in which an employee's earning is of £35,000, and this employer has decided to contribute £37,000 into his occupational pension fund. And by the way, can employee manage to contribute more than what he has earned from his employment in the occupational pension scheme? The answer is definitely yes, that employee can either decide to contribute the amount equivalent to his earning, or less than his earning, or even greater than his earning. So it is like in the hands of employee to decide that how much amount he would like to contribute into his occupational pension fund. But unfortunately, in all those circumstances in which employee would decide to contribute greater than his earning, the HMRC is like going to restrict the relief. HMRC in this case would say that, okay, fine, you do contribute £37,000, but allowable deduction is restricted up to the amount that you have earned. So in this case, £35,000 being the value equivalent to his earnings shall be treated as allowable deduction, right? So we can say that employee may decide to contribute either an amount equivalent to, less than, or greater than his earning. But as long as an employee is going to contribute the amount either equivalent to or less than his earning, the amount he's contributing shall be considered as allowable deduction. But whensoever he is going to decide to contribute greater than his earning, though he can contribute, but allowable deduction, the tax treatment will be restricted to the amount that he has received in the form of earnings. By the way, his employer has decided to contribute, let's say, again £3,000 on the behalf of this employee. And see one thing, that whensoever an employer would be like making any contribution on the behalf of their employees into their pension scheme, that shall always be treated as exempt benefit. So in this case, now I need to tell you that how much figure has been capable to catch a tax saving. I mean, how much of the value will be treated as a tax relief? It's like £3,000 will be considered as exempt benefit. So tax liability is like not going to be taken into account on this figure. That's a figure of tax relief. And £35,000 being the figure for which allowable deduction is available, and that's how the tax liability is going to be reduced. So 35 and 3,000, that makes £38,000. So £38,000 is the value on which individual had been able to save, secure, reduce their taxes. So, and again, the best point is that employee has not crossed the limit of annual allowance of £40,000. In fact, his annual allowance is still unused. It is of £2,000, right? So as long as we'll not be crossing the threshold of annual allowance of £40,000, so it's not going to be considered as something to be worried about. And then there happens to be a tax year 23-24, the employee has got a super increase in his earning. There could be a chance that he's been promoted in his job and his earning has been increased to 105,000 pound, right? So in this year, he has decided to contribute 98,000 pound into his occupational pension fund, as and his employer has decided to contribute 5,000 pound on the behalf of this employee. Keep one thing in mind, that whensoever an employee would try to contribute either an amount equivalent to or less than the value of his earning, that shall be treated as allowable deduction, which is the case over here. As if I compare the amount that is being contributed by employee as compared to what he has earned, he is like contributing 98,000 pound, which is way lesser than 105,000 pound. So this amount shall be treated as allowable deduction, while the amount that is contributed by employer, that will always be treated as exempt benefit in every case, right? So 98,000 is an allowable deduction that would tend to reduce our tax liability. 5,000 pound being an exempt benefit, that is also going to reduce our tax liability. So altogether, on how much figure we have been able to save our taxes, this is of 103,000 pound. So 103,000 pound is the overall figure on which tax liability has been saved. Tax relief is available in this case of 103,000 pound, and this is such a huge figure. In fact, it has crossed the limit of annual allowance this year. Annual allowance is of 40,000 pound in every year, and 103,000 pound is like way higher than 40,000 pound. We have not been able to save our taxes within this range of 40,000 pound. In fact, we have saved a lot, and we have crossed the limit by 103,000 less 40,000 pound. This is of 63,000 pound. And now the government is definitely going to be upset, because in this year, the amount that got qualified for relief purposes was of 103,000 pound, and this amount is like way higher than the current year annual allowance of 40,000 pound. We have crossed the limit, as what I've just told you, by 63,000 pound. And if we have saved a lot of taxes which government did not permit us, then government is obviously going to pass a rule that whatsoever the excessive taxes have been saved are to be reversed towards government. I mean, whatsoever the saving is like primarily been made, an individual shall have to pay back the taxes. The individual shall have to pay the taxes back to government. So here, I hope you are getting this point, that individual must be very upset, because though government was trying to restrict him by saying that if he would either contributing an amount which is found to be equivalent to or lesser than the value of his earning, that amount shall be treated as allowable deduction. But where he had decided to contribute higher than what he has earned, the government had restricted his allowable deduction. But here, as the earning got increased, which is why in comparison to the earning when he decided to contribute 98,000 pound and his employer had decided to contribute 5,000 pound, government initially couldn't stop him, and that's how he had been able to secure his taxes over 103,000 pound. And as government has put a restriction of 40,000 pound, so now government is like demanding to pay back the taxes on 63,000 pound, because he has made excessive saving and now he has to reverse the situation. And what is the opposite of saving? To pay something. So yes, he has to pay back the tax that he has saved on 63,000 pound. Now, this individual is in a position to claim something. And what is that? He would say to government that in the past 3 years, I had not been able to cross the limit. In fact, I had unused annual allowances figure. I mean, I did have the permission to save my taxes to a larger extent, but I couldn't have been able to save much of the taxes. So my annual allowances figures are still unutilized for the previous 3 tax years, and kindly let me allow to utilize them, as I had not been able to save taxes on £26,000, £5,000 and £2,000. So just allow me that whatsoever I have not been able to save in the previous 3 tax years, I would be able to utilize those annual allowances figures right now. And surprisingly, the government would say, okay, fine, whatsoever the annual allowance is left unused, whatsoever the figure you had not been able to utilize for the sake of saving your taxes, use them. But keep one thing in mind, that whatsoever the annual allowance is left for the last 3 tax years, that could only be used, right? If he had unused annual allowance figure for like multiple years in the past, he would not be able to make a utilization of each and every annual allowance. It is just the annual allowance for the previous 3 tax years for which he had been a member of the pension scheme to get adjusted. So when it comes to the tax year 2021, he could be able to utilize the unused annual allowance figure of £26,000. Then from the tax year 21-22, the annual allowance figure which was unused previously, that was of £5,000, and he's like going to take an advantage of this right now, the year in which an excessive contributions were made. And then in the tax year 22-23, the amount of only £2,000 was unused, and he's like going to take an advantage of this figure as well. And now, still we would say that he has some of the amount which he has saved, which is like way higher than the annual allowances figure, not just for the current year, but whatsoever was left for the previous 3 tax years, that is like still left. And if the figure is like still left, on that figure, no other adjustment could be made. On the leftover figure, the employee shall have to pay back the taxes to government. So it's like £63,000 less £26,000 less £5,000 and £2,000. So it's like £30,000 being the excessive amount of saving that has been made, on which no justification, no saving will be like permitted from HMRC. Rather, whatsoever the excessive savings have been made, we shall have to return the tax. We shall have to return the amount that got saved initially back to government. And see, and not just we have been able to use the annual allowance for the current year, and whatsoever the annual allowance left unused for the previous 3 tax years was utilized on FIFO basis. I mean, first in, first out basis. Could you see that first I used the leftover figure for the tax year 2021, then for the tax year 21-22, and afterwards 22-23, but still they were not sufficient enough. And whatsoever the remaining amount which was not covered by the annual allowance figure shall be the figure on which the charge will have to be imposed. I mean, the tax liability shall have to be paid back to HMRC. So let's see what happens when we have to consider that how much tax will have to be paid back to government in case an individual would have crossed the annual allowance figure, not just for the current year, but for any annual allowance which is left unused for the last 3 years as well. So I'm going to compute tax liability for the tax year 23-24 just to show you people that how an individual will have to pay back the tax over the amount of £30,000 on which excessive savings have already been made. Though this individual, who is basically an employee, must have been paying taxes for the previous tax years. I mean, for the tax year 2021, 21-22, and 22-23. But I did not show you the calculation because in these 3 years, nothing unusual has happened, as it is the tax year 23-24 in which annual allowance charge is going to arise, which is why I'm going to show you that how this is going to be computed. So let's start computing income tax liability for this employee for the tax year 23-24. Keep this thing in mind that his earning, by earning I mean to say his salary, bonus, commission, anything which he is receiving in the form of cash for this year is of £105,000, and he had decided to contribute £98,000 while his employer is gonna contribute £5,000. So let's see how this thing has to be tackled when tax computation will have to be made. As we all know that tax has to be computed by making 3 columns, as in non-saving, saving, and dividend. So first of all, I need to show you that what is his employment income for the tax year 23-24, as his earning for the tax year 23-24 is of £105,000. So £105,000 is his earning. His employer has contributed £5,000, but as what you already know that whatsoever is contributed by employer shall be taken as exempt benefit. So it is taken as 0, and whatsoever an employee has contributed, which is in this case £98,000, shall be treated as an allowable deduction. So that's how, see, the employment income has been tremendously reduced to £7,000. Though his earning was £105,000, but apparently he has been able to take a lot of advantages in terms of tax saving. Then we need to see that apart from employment income, is there any other source of income from which he has got income, as in trading profit, rental income, interest, or dividend. For instance, this person has also got a rental income of £38,000, right? And there is no other income for this tax year. So let's see that what is going to be his normal tax liability according to the income that he has earned in this tax year. So his total for non-savings is of £45,000. There's nothing appearing in the savings column. There's nothing in even the dividends column. So that is his total income. Against the total income, we need to deduct qualifying interest. For instance, this person hasn't paid any qualifying interest, so his net income is going to be same as that of his total income. Then of course, there happens to be a third step where we have to deduct the personal allowance figure. The personal allowance is of £12,570, and that's how we come to know what is his taxable income. So 45,000 less 12,570, that's of £32,430. That is the taxable income for non-saving. For saving, this is going to be 0. For dividend, this is once again 0. And that's how we come to know what the taxable income for this person is, right? And now on the taxable income, one has to compute the tax liability. So considering his income is £32,430, so the whole of this figure is going to be covered in the basic rate band. So 32430 into 20%. So his tax liability is going to be £6,486. And what we already know that after non-savings, we have to compute tax liability on savings income and then on dividends. But considering there is neither dividend nor savings in the question, so that's how I'll be able to come to know what the normal tax liability figure for this tax year is. So this is like going to be of £6,846, right? And now there happens to be the case that this individual has saved his taxes on an excessive basis. His tax relief was of £103,000. Though in the current year, he had a relief of £40,000, and he did have a relief in the form of unused annual allowance for the last 3 tax years. That is something which he has also got on FIFO basis. But still, he has excessively saved the taxes over the figure of £30,000 on which charge will have to be calculated. By charge, I mean to say that he will have to pay back the tax he has saved, but on £30,000. So here I'm going to calculate annual allowance charge. I'm going to calculate the tax liability which he has to pay back to government. Now, how the tax liability will have to be computed? The tax is going to be computed exactly in the same way, as in we need to see that how much is like left in the basic rate band. Whatever out of £30,000 is going to get adjusted in the basic rate band shall be charged at the rate of basic rate, and the remaining amount is going to get adjusted in the higher band. So let's see what is like going to be left in the basic rate band, as basic band has a total figure of £37,700, out of which we need to see that how much basic band has already been used by non-saving, saving and dividends taxable figure, as it is just non-savings figure whose taxable amount has utilized from basic rate band, and it's of 32430. And now we need to see that how much of the basic rate band is still left. So it's like 37,700 less 32430. So in the basic band, 5,270 is left on which basic rate shall be charged. And as I am calculating annual allowance charge, so keep this thing in mind that the rates which are generally applicable on non-saving income will have to be applied in this case. So what is the basic rate for non-savings? That's of 20%. So on this figure of £5,270, the basic rate will be applied, which is of 20%. So that's going to be of £1,054. While the remaining amount on which charge has to be computed, the remaining amount shall be charged over a higher rate because basic band has come to an end. And as what I've told you, that the rates that I'm going to apply will be exactly the same as what we apply on non-savings taxable figure. So as 30,000 is the figure on which charge has to be calculated, on which tax liability shall have to be calculated and paid back to HMRC. Out of this £30,000, £5,270 has already been considered for the sake of calculating annual allowance charge, while the remaining figure is going to be of 24730. On this 24730, the liability is going to be calculated by applying the higher rate because basic band is over. So on this remaining amount, as it is going to be covered under the high rate for 40% shall be charged, and that is of £9,892. So see, this is the annual allowance charge of 1,054 and 9,892. Now I need to see this thing, that what is going to be the overall tax liability for this employee, for this individual. His original tax liability over the income that he has earned was of 6,486, and then we calculated annual allowance charge, the tax liability over the figure on which he has previously been able to save excessive taxes, and that's how the amount that he is now going to pay to HMRC is of 17,432. I shall call it as revised tax liability, as not just what the income he has earned in the tax year he is going to pay tax on, but whatsoever the excessive savings he has been able to make previously, he shall have to return the tax as well, which is called annual allowance charge. So altogether £17,432 is the figure which he now owes to HMRC.